All right, good evening, everyone. Welcome to the Hurley Investments Market View Commentary for Monday, the 22nd of August. It was funny because over the last little while, in my opinion, more and more people started value being with Hurley Investments because we do things different, right? A couple people asked, well, what are those things that you guys were doing different? And one of those things was tonight. We have weekly webinars to find out what we are thinking, what we are doing to portfolios, right? And to ask questions. The reality of it is, this is your money, right? So if this is your money, you should know what it's doing. It's my belief you should have a say in what's going on. That's why you hired me to do things. Another reason why Hurley Investments, we add protection. And today we add protection on Apple, Bank of America, I believe, Ford, Meta, Visa, Under Armour, Disney. So yes, we went and we added protection on certain positions within portfolios. 1, 2, 3, 4, 5, 6, 7. I actually think that's all the damage we did right there. We didn't protect banks yet. Any idea why might we not be protecting banks as of yet? Someone go ahead and suggest why would we maybe not be protecting banks right now? Why would we not be protecting banks right now? That's funny. That's not necessarily the reason, but I like it. Why might we not be protecting banks yet? And it'll be, yeah. In fact, a couple of you kind of said it simultaneously. The current interest rate, Fed hikes, and interest rate hikes benefit banks. But we're close. We're very close. We're very close to protecting banks because their charts say so. It's really that simple. And the same person that emailed why Hurley Investments and explaining what you do different. Yes, we let Baidu run without protection. That is 100% correct. So one of the points that was mentioned is we run portfolios under the Warren Buffett fundamental analysis, but we also protect with long puts. And that's what we do. I mean, it's really, it's kind of that simple. So for the last 4 weeks, we've been letting some things run. Last week was the first down week in 5, and we had a little bit of protection on there. And today we went back to protecting a lot of stuff. I mean, it just, It was common sense. And when I say common sense, going and taking a look at the spiders, the S&P 500, technically, we're just getting our crossovers. We're not quite crossed over. It has to go below 50. And we're probably just getting crossovers here. But what we ran into is we ran into the 200-day simple moving average. And it didn't test it. There are not a lot of buy orders stacked up here yet, partially because the market was down here 30 days ago, right? So there's not a lot of buy orders or purchase orders there yet, which means looking at the chart, I'm going to erase it. Where do you think the S&P 500 is going to go? Where would you think the S&P 500 would go looking at it from here? Yeah, I mean, perfect. I agree with you. And that's an interesting point there, Lance. We broke the R1 pivot point. So we're probably heading back down to 39.97 to 39.69. Our next test will most likely be the 50-day simple moving average. So we started to add protection on. Something to look at it if you just want to do the math. We were at 43.25. We're now at 41.37. So if I was just to get a quick calculator, 43.25 minus 41.37, we lost 188 points from the highs to the low. So from the highs to low, we lost 188 points, which basically is this movement from here down to our median line. If we're going to continue down to the oversold, we would take 141.37 minus 188 points. That puts us at the 39.49 range, right below here, which would coincide with a little bit of a base there, 39.45 right here. It would coincide with a past pivot point. We're right there. So the expectation, probably going to head back down. And we're going to test the 50-day simple moving average. The scary thing is if we break that blue line, if we break the 50-day, we most certainly will go back and touch these lows here, but 3,200 to 3,000 is more likely. If we were to take a look at the Dow, much the same thing. It is still technically bullish, but turned and heading bearish. Is not bearish yet till you have your crossovers. And if we look at the NASDAQ, right? NASDAQ, a little bit different. Has crossed just barely, 48.37. Has crossed just barely, and we have our crossovers here. So the first index to go bearish right now is the one that's probably most affected by interest rates, and it's the tech sector, right? So there we go. Technically speaking, our markets are turning bearish with having a 1.22 bearish week last week. So last week, our markets were the first week in 5 weeks that the S&P 500 went bearish. Hence, we've been letting things run. The reality is we've had 1, 2, 3, 4, 5.5, maybe 6 weeks of a nice run up. We protected through some earnings. At least for 3 weeks, we've had very little, if not no protection running in line with the trend. So that's why we were doing what we were doing. I mean, it's just kind of what you would expect. Jim said there's no sound suddenly. Are you guys able to hear me? I'm showing I'm doing okay. Russ, can you hear me? David, can you hear me? Lance, can you hear me? Let's make sure you guys are able to hear me here. I look good. Russ says yes. Dave and Lance say yes. David says yes. How about you ladies tonight? Mary, can you hear me? And Elizabeth, can you hear me? Yes and yes. So Jim, everyone else can hear me. All right. Here we go, moving forward. Somewhat interesting. And a couple of people have been asking me about, is it Dave Ramsey and Phil Town? And plain and simple, yes, they have basic investing suggestions that everyone should already know. Yes, they don't make their money from the stock market, and they don't actively trade. Someone said, well, Phil Town, I mean, he's in 53% bonds. They're not in the stock market. Yes, they make their money from books and seminars / YouTube. I mean, some of their stuff is really good. To be honest with you, as much as I hate admitting it, some of their stuff is really good. Very basic. If they were still doing what they would be doing, there's so much more money to be made in the stock market than selling books and all that other crap. So just between you, me, and the fence post, kind of like Jim Cramer, right? If they really were able to do what they said they could do, they would be doing it. They would not be on TV. They would not be doing seminars. They would not be selling books. That's kind of where the chump change is money-wise for people that say they can do what they do. Really, if they were doing what they said they could do, if they were investing in the stock market, had their licenses, actively have a brokerage firm up, they'd be making hundreds of millions of dollars versus millions of dollars. And there's a big difference, a very big difference. So we're thinking things are turning down. Our expectation is we are looking at things turning down. And so we're starting to protect accordingly. Our expectation is to be in full collar trades with the short call to make every penny on the way down. Someone asked me via email, how long? Most likely into October, because the Fed is going to do another 50 or 75 basis point rate hike. So the simple answer is pay off your credit cards. Get them paid off quickly. You guys are in trouble if you're going to be sitting in credit cards. Reset your mortgage rates. And no one can predict recessions. We'll probably come out of it fourth quarter, but we would probably go back into it the start of 2023. So, I don't know. I mean, it's just, let's face it, the U.S. does a really good job of spending money, consumers, the last quarter, October, November, December. We really like Christmas. And so when it comes to that, we boost our GDP. Really, really hard to have a negative GDP number for the fourth quarter. It's just super tough. If we were to look at the big picture and what it all means, kind of funny. We bounced off our wall of worry on June 17th when things are not as bad as the earnings suggested they could be. We had a little bit of reprieve in regards to inflation. But, geez, I mean, we're still paying $4.78. We're down we're down 50 to 65%. And we're not paying some tax, which really doesn't help out our country in the long run. We're not paying a little bit of tax on our gas. That's all that's happened. All that's happened is we are, how do I say this? We're kind of being duped to think inflation has been running away. We basically just have, how do I say it? We basically just have a small tax break. And again, inflation has been created by supply and demand, not by the price hikes. So just something to keep in mind. All right, here we go. Let me go through. I went through our charts. If you're to ask me where we're going to go, I would most likely tell us lower. This would be the second week in a row, and I'm doing nothing more than following the trend. Our next support level down the Dow is that 31,864, which is the 50-day. That will also coincide with your center pivot point at 31,966. As we talked about the S&P, probably 39.69, could go down to 39.49, or we also have that center pivot point at 39.97. If we break that 50-point downward movement, 3,700 is our next drop. 3,600 would be our drop after that. 3,200 would be our drop after that. All we're doing is following some past history. Nothing more than that. All right, NASDAQ again, already broken. 11,833. We could hit that center pivot point at 11,909. And again, if we break the 50-day, 10,565 would be the expectation on the way down. And we've got to wait till, we've got to wait till September 27th for that rate hike. So we basically have 4 weeks out for that rate hike. When here we are in trouble. Yes. The short answer is yes. Today was the worst day in the stock market since June. And we'll probably get a little bounce tomorrow because we've had such a big drop down, but then we'll continue to head to the downside. If not, if we don't hold tomorrow, we keep going down. Scary looking bottom is what I'm going to tell you. A real scary looking bottom. All right. You know what? I keep forgetting. Short answer is yes. This is the third and last week of retail sales companies. So what I mean by that, let's make a quick run to our earnings as I make you all sick as I scroll on down super quickly. Palo Alto knocked it out of the park. They were up $50. Zoom today, I thought was not very good. Take a look what Zoom did. Yep. Zoom's down 8.3%, $8.09. They're a wreck. They're a train wreck. Tuesday, JD, Macy's, Dick's Sporting Goods, Nordstrom's, Toll Brothers, Urban Outfitters. Wednesday, Guess, NTAP, NVIDIA, Salesforce, and Snowflake. Thursday, Abercrombie and Fitch, Burlington Coat Factory, Dollar General, Dollar Tree, Dale. Actually, GES is Guess, GPS is Gap, Marvel, Ultra, and VMware. So a lot of retail sales are coming through in the next couple days, and that's the third and final week of retail sales. The last 2 weeks, they've been atrocious. They've really been the pits. What are we doing? Currently protection on most core holdings and letting some stocks run. It was pretty interesting. I had someone that sent me an article and I had just read it myself. Apple reporting shifting watch and MacBook production to Vietnam. They are not shifting the majority of their Apple watch and MacBook Pro to Vietnam. They are shifting roughly about 16% of it and just making sure they have different suppliers and they're not running everything through China, which is really running a lot, like 66% of all their product is coming out of China right now, or Foxconn, right? But it's good to see. I wish they'd kind of go through, I don't know, South Korea to do some of it. Maybe, I don't know. It's good to see that it's being diversified is what I'm going to say. Better if they're running more of it here in the United States. Very interesting article and saying the recession is not priced into stocks. And it's a $1.4 trillion hedge fund manager. plain and simple, if you just take a quick peek at what he's going to talk about, number of global contractions, 15, right? And the duration is 7 months, 2 months, maximum 15 months. It looks pretty bad. It looks bad as we're looking at global contractions in Europe and South America and Asia, obviously Russia. We're getting contractions all the way across the board. And the global economy is slowing down. Something that you typically want to understand and make sure that you have a pretty good understanding where things are going. But one of the unique charts was the CEO confidence. And it's interesting because other than Jamie Dimon, I haven't heard a whole bunch of negativity unless it surrounds earnings, right? Well, Kevin, what about all the chip decreases and, hey, we can't get the chips, so we can't make our products? Yeah, I'll give you that. I mean, we do have obviously some of that we're dealing with, but it's rather interesting that I don't think I've heard a lot of negative CEO confidence. I just haven't. I'm not seeing it. With that said, apparently how they create their chart, over 80 down to 35-ish, apparently a lot of CEOs are not on board with the recovery that our administration or that the GDP numbers have been showing. So it's kind of pretty simple just to say, hey, we've got a problem here, right? There's a problem here that no one sees. Disney CEO Bob Chapek distanced himself again from Iger with Disney Plus pricing, raising the pricing 38%. They're no longer the cheapest, which is what Bob Iger wanted to do. Make it the cheapest, everyone would get it. And let's face it, going up to $9.99 or $10.99 is not going to be in that area. They will be one of the more expensive ones again. And that's all I have for you. With that said, kind of a quick one today. Any questions you guys have that I can answer for you? Any questions on that maybe you had already asked that I have not answered up here at the top? So yes, that's a good question. Let me go through what that is. So it's just asked, what is the full collar trade? And that is long stock, which makes money when the stocks are bullish, right? We have a long put that we also pay for that acts like insurance when stocks go down. And then we have a short call that is not a naked call because we have the stock there. A short call, which is the obligation to sell our stock at a certain price for a certain period of time. And it's a credit into our account. Plain and simple, someone pays us for the right to buy the stock. It's a credit that will pay for a good portion, if not sometimes all of our protection for a while. So that way we can make up penny for penny on the way down. Another way to do it is to add an additional long put contract. That's another way that we can give that opportunity to get things on over. Are there any other questions? All right, well, hey, you guys have a great day. We have Keeve on Thursday. Next week, we'll do everything normal, but the following Monday, we have Labor Day coming up here in 2 weeks from today. So in 2 weeks from today, we'll push our commentary out till Tuesday. All right, guys. Hey, no other questions. I appreciate you being here. Look forward to seeing you next week. If you do have any questions, again, don't hesitate to keep adding those comments in via email. A lot of people have asked, well, usually, yes, I'll answer your questions via email. But if you have those questions, sometimes other people also have those questions. So I do the best I can and make sure that I don't put you on the spot, but that we get your questions answered, and I will usually try to run them in some way, shape, or form in front of the group so that everyone can hear that question, and maybe half of you or a third of you have that question as well, so you can get your answer. Jim, sorry the audio was out. Don't know what happened there, but I'm glad you just got out and got back in. Everyone else seemed to have had audio, so bad connection maybe, or it could be a GoToWebinar issue. I really don't know. All right, guys. Hey, thanks for saying thanks. Have a good night. Sorry it's a little quick and easy, but we'll go down and dirty today. I look forward to seeing you guys next week. Bye-bye.